All right, let's just state the obvious. The AI revolution is in full swing, and honestly, it feels a lot like a modern-day gold rush. So, in this explainer, we're going to decode the AI stock market for 2026 and 2027. We're going to look for those hidden opportunities and, more importantly, show you how to read the market's mood.
You know, this is the one question every single investor is asking right now. With all the hype flying around, it's really tough to see through the noise. To figure out where the market is actually heading, we need to look past all that and find out where the real, durable value is being built.
In this quote, it's basically the key to this entire explainer. Seriously, just think of this whole AI boom like the California gold rush. Yeah, you've got tons of people rushing out to find the next big AI application, that's the gold, but the truly massive, eye-watering profits, they often go to the companies providing the essential tools and infrastructure, the shovel sellers.
So let's start right there with the shovel sellers. These are the absolute giants with huge profit margins, and they're providing the must-have tools for this whole digital gold rush. They aren't just playing the game. They're the ones making the game possible for everyone else.
First up, you have to talk about NVIDIA. I mean, if AI has a brain, NVIDIA is the one building it. They make these highly specialized GPUs, the chips, that are pretty much the engine for all things artificial intelligence. Their whole strategy is pretty simple, but man is it powerful. Stay 2 steps ahead of everybody, constantly pushing forward with new stuff like their upcoming Rubin platform.
NVIDIA's dominance is just staggering. I mean, their market position is so strong that companies are literally lining up to get their hands on these chips, and that leads to incredible, almost unbelievable 50% net profit margins. But, and this is a big but, the risks are just as real. What if this is an AI bubble and companies suddenly pull back on spending? Demand could just vanish. And of course, you've always got government sales restrictions, which are always a wild card, right?
Okay, so selling shovels is one thing, but the gold miners also needed a place to live, a whole town, right? They needed infrastructure. Well, that's where the AI boom towns come in, the digital framework and the raw power that fuel this entire operation.
And this is where Microsoft and Amazon come into the picture. Through Azure and AWS, they basically own the cloud. You can think of them as the digital landlords of these new AI boomtowns. They're renting out the computing power and services that every company needs to build and run their AI. Their goal is to make their digital real estate so essential that leaving is not even an option.
Their secret weapon is what I'd call subscription power. That steady, recurring revenue from stuff like Microsoft 365 and Amazon Prime creates a mountain of cash they can reinvest. But here's the catch, the huge gamble they're making. They are pouring nearly $100 billion a year into AI gear. That is a mind-boggling number. It's a massive bet, and the whole market is kind of holding its breath to see if it pays off.
Now let's talk about a totally different kind of shovel seller. Because here's a little secret about AI. It is incredibly thirsty for electricity. That's where a company like NextEra Energy comes in. They're basically building the power grid for this revolution, specializing in huge renewable energy hubs for the tech giants. So, what's cool about NextEra is that it's kind of insulated from all that wild tech volatility. You can't have AI without power, period. End of story. Even if some AI companies go bust, the data centers still need to keep the lights on. The risks here are different, though. They're more physical. You've got government regulations capping prices and the very real threat of extreme weather like hurricanes.
Okay, so we've looked at what companies are shaping this market. Now, let's switch gears and talk about how to analyze them. We're going to move from the company's financial health to the market's mood. And to do that, we're going to open up the investor's toolkit and grab a few simple tools from technical analysis.
The first tool is called support. The easiest way to think about this is as a price floor. It's that level where a stock just seems to stop falling because enough buyers suddenly jump in thinking, hey, this is a bargain, and their buying creates a sort of safety net.
And the opposite of support is, you guessed it, resistance. This is the ceiling. It's that price point where a stock really struggles to climb any higher, usually because a bunch of people who bought it way cheaper decide, all right, I'm happy with my profit, time to cash out.
And finally, we have volume. Now this is your truth detector. It's the confirmation. See, if a stock breaks through its ceiling but hardly anyone is trading it, could be a fake out. But if it smashes through that ceiling and the trading volume is massive, oh yeah, that signals a real powerful move that the market truly believes in.
All right, the toolkit is open, so let's put these tools to work. We're going to look at the charts for the companies we've been talking about and see if we can decode the market's mood for 2026 using some of these classic visual patterns.
And boom, here it is. This slide is basically your visual cheat sheet for everything we're about to talk about. It pulls our whole toolkit together and applies it to our key companies, giving us a complete snapshot. You can see the patterns, the key levels, even the risks. It's all right here in one place.
So this table breaks it all down for us. You can see for NVIDIA, we've got a pattern called an ascending triangle, with the price bouncing between a floor of 175 and a ceiling of 191. Microsoft is consolidating, basically trading sideways. Amazon is forming a classic cup and handle, and NextEra is in what's called a bull flag. So, what on earth do all these things mean? Let's break it down.
So NVIDIA's ascending triangle is kind of like a steering wheel, right? The price is getting squeezed tighter and tighter up against that 191 ceiling. Amazon's cup and handle looks just like a coffee cup, and it's often a sign that a stock is brewing up for a big move. NextEra's bull flag is more like a staircase. It climbs, takes a pause on a landing, and then gets ready for the next climb up. And Microsoft, it's just consolidating, kind of taking a breather between 460 and 485 after its recent big run.
Now, patterns and fundamentals are fantastic, but we have to talk about the elephant in the room, the single biggest risk factor that all investors face, especially if you're just getting started.
And that is volatility. You know, tech stocks, they're famous for it. Their price swings are just like a roller coaster. The ups are absolutely thrilling, but those drops, man, they can be terrifying if you're not strapped in and ready for them.
But here's maybe the most important thing I can tell you about risk. If you're a younger investor, time is your superpower. The real danger isn't that one of these stocks has a bad week. Nope. The biggest risk is you getting scared by that short-term drop and panic selling at the worst possible moment. Managing volatility is all about having the patience to just ride out the storm.
So, we end right back where we started. As this AI revolution keeps unfolding, the critical question isn't just what's the next big thing, but how does that thing get built? The question for you is, are you going to be watching the hunt for gold, or are you going to be watching the fortunes being made by the ones selling the shovels? It's something to think about. Thanks for joining me for this deep dive.